What is going on, investors? Hopefully you guys are doing well out there. That is right. It is Friday. It's the last day of school for some people over here in my household, and it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. This week we had a lot of these stocks find some selling pressure. You're going to want to stick around to the chart segment where we see it in the S&P 500. We see it with Meta. We saw it with NVIDIA, and you'll want to stick around, but we better kick things off like we always do with Meta Platforms. Start the week at 475.20, down about 1 3/4%. Finish the week at 466.99. Company declared its 50-cent dividend. Now, obviously, from a yield perspective, certainly not big. You're getting less than 1%. And look, the buybacks certainly have benefited shareholders, certainly does benefit you, the shareholders, but there's nothing like getting that dividend check from a company that you own, and Meta Platforms starting that dividend train. Got to give them props for doing that. Now, ByteDance, which owns TikTok, they're halting their plan to launch the TikTok Shop, which is an e-commerce feature inside of the popular social media app. They're going to pause that rollout in the great country of Europe with a plan to really focus here on the United States. Now, obviously, the elephant in the room is there is a signed bill into law which will force a U.S. ban on TikTok if they do not divest or sell the app to a U.S. interest here in a short period of time. So we'll see if TikTok's able to do that. Moving on to Apple. Start of the week at 190, one of the few stocks up this week by about 0.83% to finish the week at 192.31. iPhone shipments in China soared 52%. As we talked about this last month, there was a few headlines that came across. Some of the Chinese e-commerce sites offered relatively decent discounts for the iPhone last month. Well, those discounts worked, as again, shipments of iPhones soared 52% just last month. Now, Apple is planning a major AI upgrade. We are getting the Worldwide Developer Conference from Apple next month, so it's going to be a big month, and we're going to actually see if Apple has some major plans. Now, Bloomberg does a great job. They have a great reporter there that reports on a lot of the news. He clearly has inside sources and a great source over at Apple, and Apple might be just feeding him the news, but you are likely to get an update for Siri, which is probably 5 or 6 years overdue at this point. You're going to be able to have like custom emojis, like these are very small incremental changes, and really for Apple, it'll be how they sell those small incremental changes, how it's received by the tech community. Is it just kind of boring, or is it perceived as something that's actually kind of exciting? And how does Apple plan to market that? Now, Apple is looking for an Android engineer, this, according to a job report, to help build a new app. This is for TV and sports, presumably their TV Plus service potentially coming to Android, as, again, the popularity of that TV Plus app tied to sports as well, gaining some traction across all devices, not just Apple. Now, Apple News Plus. I love Apple News. You're going to think the company is paying me like a sponsor's bid here. That is not true at all, although Apple could always contact me for any kind of sponsorship. And they're seeing growth on that app outpace the other, New York Times, Wall Street Journal. The reason why I love Apple News Plus is I can subscribe to one service and I get access to New York Times, Wall Street Journal, WAPO. Anything behind a paywall, I tend to get access to, and I only have to pay one fee to one company instead of managing all these subscriptions. And the company is certainly seeing success there. Now, Apple's in-house AI servers. We'll get probably a fair amount of details on this. They'll probably get into the nitty-gritty of this during the Worldwide Developer Conference, again, set to kick off in the month of June. Company is going to have in-house AI servers. I did a video on our newsletter channel. We're going to be talking about how they're going to power these things with computer chips that were already available inside of a certain MacBook Pro computers. I absolutely think Apple is going to protect the privacy better than other cloud providers, such as like Amazon, certainly Google, Microsoft, those types of things. But does anybody care outside of the ultra kind of tech geeky person? And how does Apple market that? And does it work? Those are the questions. And obviously, if they're powering this with their own silicon, how do they market that? And how well does it work? Those are questions, obviously, that'll get answered a little bit during the Worldwide Developers Conference, but more so when the features actually begin to roll out. Now, moving on to Amazon. Start of the week at 179, slipping down. You got to see this technically. 1.9% to finish the week at 176.44. Amazon Prime granted a beyond visual line of sight flight certification to expand its drone deliveries. We've been waiting for this for like a decade. After Jeff Bezos, I think infamously or famously went on 60 Minutes to show off Amazon Prime Air, now we're finally getting beyond visual line of sight, which allows them to fly and deliver packages beyond having somebody at the controls being able to see the drone with their own sight. Now you're going to be able to fly these everywhere. Now, other companies have rolled out this feature. Walmart has a really cool drone capabilities. I've watched some videos and read some research on that. You also have UPS, although they have a pretty decent labor union that is obviously has their interest top of mind, and so they don't necessarily want to see these drone deliveries. So we'll see how Amazon is able to roll this out. My guess is Amazon's going to move very, very quickly on this because there's a lot of implications. Now, Amazon announced that Grubhub Plus is an ongoing Prime membership offer. Those of you that remember here on the channel, we had a press release came across last year as Grubhub Plus allows you to link your Amazon Prime membership to it and giving you access to Grubhub Plus as basically a Prime member. I immediately did that. I thought that was interesting. There should, and again, if you are not aware of this and you use Grubhub or it's something that you want to use, or maybe you use one of the other services like a DoorDash or an Uber Eats or something, well, you have access to Grubhub Plus. Also, not a sponsor's bit, although Amazon certainly could send us a check if they want to. Now, a judge is allowing an FTC lawsuit tied to Amazon Prime memberships to continue forward. The FTC is alleging that Amazon makes it difficult for Amazon Prime members to cancel their subscription, and I bet Amazon is probably guilty of something here. Maybe a fine will take care of that. Now, one of the reasons why that Prime Air and drone deliveries are so important for this company is Canadian workers will vote to join a union. And so the more and more, and again, I'm just speaking from an investor standpoint here. People think that I'm anti-labor, anti-union, and all this type of stuff. Look, I'm just giving it to you straight here. The more we can replace these people with robots and drones, the better it is for Amazon and the better it is for Amazon shareholders. And that's the interest that I have for you, the viewer. If you want to care about unions, care about labor, and all that type of stuff, that's on you. But at the end of the day, if you buy Amazon shares, you want those Amazon shares to go up, and drones and robots is going to be a big part of that going forward. Moving on to Netflix. Start of the week at $6.45, down fractionally about 0.5%. Finish the week at $6.41. Netflix is moving into its strongest position financially. That's according to Evercore, and you could open up the financials, which we do every quarter for these companies, and actually see this. This is a company that's generating a lot of operating profit. They have a lot of cash balanced off by just a small amount of debt. They're generating lots of operating cash flow. They have a lot of operating leverage in what they're doing. They continue to have pricing power as well, as they've raised the price across a lot of different regions. They're also implementing that ad strategy. They're moving into live sports. This is actually a pretty darn exciting company. Now, moving on to NVIDIA. Start of the week at $1,111.55. And it, guys, is the Earth still rotating around the sun? Because this is one of the first times I've ever seen this. NVIDIA shares down 1.5% to finish the week at just under $1,100. Now, NVIDIA is generating 10% in revenue from two, quote, mystery customers. That's according to the 10Q filing. So when we do our earnings videos, we don't actually get the 10Q filing. Usually it's a couple of days or maybe even a week after. You can get in there, and it gives you a slightly more detailed and slightly more nuanced view into the company. Now, for companies like NVIDIA, you don't necessarily have to dig into the 10Q if you watch the video or you go through the financials on the day they're released. But it's critical for the smaller companies that you invest in, where the business model is certainly not as good as NVIDIA's. Certainly worth going through the 10Q even after the earnings reports and conference calls and those types of things. But they have two indirect competitors representing about 10% or more of its total revenue for its first quarter. One has to be Microsoft. The other one, I guess, could potentially be Meta, maybe the federal government. Maybe there's another company in there that I might be missing. Now, NVIDIA-backed CoreWeave, which is a cloud computing giant that has been getting priority shipments from NVIDIA. So NVIDIA made an investment in CoreWeave, which at the time was a really relatively small cloud provider, probably in the top 10, but definitely towards the bottom end of that. But NVIDIA gave them priority shipments of their GPUs and has built CoreWeave up into actually a really large company that has continued to get funding both from the debt side, but also the venture feature side, and they're planning to go public in 2025. I think that's probably when you see peak hardware. When you see hardware startups wanting to go public, it's probably telling you that the hardware cycle is going to peak out here pretty soon. Now, AI boom. NVIDIA's market cap is closing in on Apple. That's got to be a sign as well, is that we've got to be hitting peak hardware here pretty soon. Now, deflationary boom stoked by AI surge could mean more upside for stock. This is according to Alpine Micro. I've got something maybe for the newsletter channel, maybe next week on this topic, where you have all these cost savings from these companies. NVIDIA is obviously doing a great job, and they've done an amazing job with their products, and these are making their way out to data centers. And so now new software is being developed that is allowing companies to run more efficiently, more profitably. So that could create a disinflationary environment, which is slightly different than deflation. We don't have to get into an economics 101 discussion, but it could be related to AI, efficiencies, all those types of things, and it could have a big impact on the stock market. Now, China set up a $47 billion chip fund to really go toe-to-toe in the chip wars here with the United States. This has some political stuff, which maybe we won't talk about today since that's a hot button issue at the current time. But as we get closer to November, we do have to discuss these types of things, as both candidates definitely talk tough against China and both tend to have tough actions on them as well. Now, move on to Google. Start of the week at 175, down about a point and a half. Finish the week at 172.50. Now, Google is laying off some people in their cloud unit. This was about 100 employees in their APAC region. Really, I'm just bringing this up to show you that Google continues to be very efficient. Even when you bring up their financials, they're printing ungodly amounts of revenue, net income, operating profits, operating cash flows, but they continue to lay people off, which, I mean, we're sorry they lost their job, but as a shareholder of Google, this is good for you. Now, Google partners with a startup called Magic Leap, which I'm only mildly familiar with, but they're a leader in augmented reality, and so that's interesting that Google is partnering with them. Maybe some interesting projects coming down the pike. Now, Google Search, their secret algorithm was leaked in documentations, over 2,500 internal documents that outline things like how the search engine collects and uses data and how the algorithm works for search results, was leaked, although a spokesperson from Google saying some of this might be out of date, but I bet you SEO specialists are poring over those documents. HubSpot ticked higher amid a report that Google continues to raise its offer. HubSpot, which we've talked about, is actually a pretty valuable company, over $30 billion. They've seen shares surge over the past 6 months, over 23%, as Google is poking around, maybe trying to make an acquisition here. Well, last I saw that it was an all stock deal. So if you owned HubSpot, you would probably trade it out, if you will, for Google stock. It's not necessarily set in stone. Obviously, those deals can work out. Obviously, as well, you'd have to get through regulatory approval, which you got to imagine is going to be a tall hurdle for Google. Now, Google also implementing AI features into new Chromebooks. We're seeing a surge of AI PCs. Obviously, it's the time of season where you start to roll these things out as you move into back to school season. But I actually think these AI PCs have features, and we're moving into a trough. We saw it with Intel. We saw it with AMD, seen it with other chip providers, where you did see an actual trough in PC demand towards the end of last year, and you're seeing a refresh cycle, and you've got new features that I think probably will encourage that refresh cycle. Moving on to Microsoft. Start of the week at 426, down 2.7%. This one's teetering on the edge of a technical pattern at 415.13. Now, Microsoft is catching heat from senators as they have serious concern over the company's cybersecurity snafus, as they call them. As we've reported on here on the channel, the company has gone through numerous different hacks, and I think it says a couple of things. First of all, Microsoft, probably not the greatest at cybersecurity. I think that leads you to other cybersecurity firms that are publicly traded. Certainly could be an interesting investment thesis. I suppose Microsoft could beef up its cybersecurity business by making an acquisition. Obviously, that also have to get through regulators, which I doubt at this point it would, but that could maintain and elevate some valuations inside of that space. OpenAI is signing licensing and product deals with The Atlantic and Vox Media. These are content outlets where they are licensing the content to train their algorithm. We've talked about a lot here on the channel. I think this is going to become a new way for content creators to make money. Today, you're doing affiliate deals, you're doing ad deals, you're doing sponsorship deals, and those types of things. And that's really how you make money. There's also obviously like Substacks that charge like a membership. Well, this is going to open up a new way to make money. The big media outlets will be obviously the first to benefit, but I think down the road, OpenAI, the AI companies, are going to realize that giving that power to the small creator to make money certainly worked out for YouTube and Google, and it'll work out for the AI companies. But these content deals are going to be under scrutiny by the DOJ as they want to make sure AI companies are adequately compensating their creators for works. And these are going to be things that are work in progress, and they might be mispriced right now. It could be better for the Vox Media. It could be better for OpenAI. We don't know, but over time, the price and the value for this work will even out. Now, OpenAI to see PricewaterhouseCoopers become the company's largest ChatGPT enterprise customer. Thought this was an interesting story because we're seeing now who outside of mega cap tech, outside of search engines, all that type of stuff, who is going to be a big customer of AI software. And we're seeing accounting firms are jumping on board. I also think financial services as well, probably going to be a big buyer, and that's a story we're going to keep close tabs on. Now, Microsoft to offer Call of Duty on subscription. This has me reminiscing of when Adobe changed from charging you like $200-300 for Adobe Flash or Adobe Photoshop to a subscription model. And now you're going to be able to pay anywhere from $9.99 to $16.99 a month and get access to a video game that used to sell every year for as much as $70. So Microsoft moving to a subscription service. I'm sure you're going to be able to get the physical disc as well. This certainly impacts companies like GameStop, which kind of has taken on a life of its own from a meme stock perspective. But I certainly wouldn't want to be sitting there as a GameStop relying on these physical discs as companies like Microsoft set a new trend of just giving it to you as a software as a service. Moving on to Tesla, start of the week at 173, and the one stock that has just been getting pummeled all year. I mean, year to date, Tesla's down 28%, but a little reprieve this week as shares of the electric vehicle giant up over 2.5%, finished the week over $178 per share. Tesla is pushing for full self-driving approval in China. I feel like Tesla is being treated better in the country of China than it is maybe by its own current government. And look, that's good for Tesla, right? Okay, China's a gigantic market, and if they can dominate China, or not even dominate China, it's probably not the word, but if they can find a lot of success in China, obviously that's a fragile and comes with its own risk factors, but if they can get a big chunk of the China, either full self-driving, certainly they're getting a chunk of the EV market as well. Oh my goodness, that could turn a $570 billion stock into one much larger, obviously. Now, Elon Musk, AI startup XAI, hit a $24 billion valuation. Oh my goodness. After its latest fundraising round, and Cathie Wood is part of that fundraising round as she acquired a stake in XAI. Now, believe me, this is not a recommendation, but you can get access to Cathie Wood's investment in XAI through one of her funds, which I think you have to have the SoFi app or another one. The ticker symbol is ARKVX. Again, not a recommendation here. But I decided to point that out. Now, moving on to the technical segment of the show. And we love looking at charts and graphs because when the technical pattern plays out, and really the technical pattern has been playing out for a long time, at least in the current uptrend that we're in. You could have said the same true about the downtrend that we were in, also the uptrend after kind of the COVID crash and boom. Technical trend pattern is playing out. We're making a series of higher highs, higher lows. The higher highs comes in and the sellers step in. I mean, everybody's looking at the same charts. We're not the only ones that look at these charts with the same type of lines and the same type of perspective. Looks like you're pulling back. The difficult thing to do is predict where these things want to pull back. As you're pulling back, you feel like it could literally go on forever. First area for the S&P 500 that makes a lot of sense is probably like 5136. You probably got a little downward pressure in the markets next week. Further down under 5,000 is a time to not necessarily unload the clip, but that would be a time to really move. Obviously, deeper pullbacks, you'd have probably some economic struggles. Really, really bad news. You have to make the decision now because if the S&P 500 slices through 5K and then slices through like 4,800. Every YouTube video is going to be doom and gloom. That's when you step in. That is when you're going to step in, and that's why you have to make the decision now, because everything in your content recommendation feed is going to be markets crashing, world's ending, and it never does. Now, moving over to Meta, technically we have found resistance up here at 481. 481 served as support after our initial kind of breakout from really sensational earnings, dividends, those types of things, buybacks from Meta. Acted as support, although we broke through that on the subsequent earnings announcements. Shares have kind of found this area at 41. We're consolidating between 450 and 480. Breaks below that, I think you're looking to buy Meta. Breaks above, you're probably being a seller, at least in the shorter term. Moving on to Apple, we are still consolidating between 166 and 195. I don't think anything that we're going to hear during the Worldwide Developers Conference is going to shoot this over and above, unless, again, it's some kind of news that we're not privy to. Certainly, you get anything like that, that could fundamentally just send the stocks even higher. Apple, obviously, in here being a buyer of the shares as well. That is maintaining and helping shares catch a bid. Any rejection at this level, you're actually expecting Apple to get rejected over really the next week, probably find resistance at 195. This is not going to happen all in 1 week, but over the next month, maybe even 2 months, pullbacks in Apple, there's areas obviously south of 175-ish that probably should be bought. Now, Amazon has been on watch. We're right here in the middle of the channel. Wick through it nicely. You could get an opportunity. When you slice through the middle of these channels, you could get an opportunity down here. Bottom of a channel, that would be a great buy opportunity right now. Also, Amazon can be bought based on that uptrend and the technical pattern that we've identified. Moving on to Netflix, in the most interesting space. This is, again, I think we're destined to retest these highs at 710. I don't think I'd be really excited about buying Netflix at that area, although you could have an earnings report, some kind of news, whatever, maybe really successful Jake Paul and Mike Tyson fight or something like that, could surge you and have kind of this meta-like surge above highs. More likely you get rejected this area anywhere south of probably 600 on Netflix could be bought. Now, moving over to NVIDIA, we gapped up, obviously, after earnings, a little bit of euphoria, a little bit of time above trend, if you will. Nothing out of the ordinary. Now you've come back and kind of back tested, again, the top of this trend, which has really been in place for a really long time. I mean, you can stretch this back to 2017. So this is a near 7-year kind of top of the channel line, if you will. Back testing there. You'd like to see, if you're bullish these shares, you'd like to see it hang out at that region. Otherwise, you're probably coming back here. First area of support is back here at 950. That'd be the first area where you, quote, buy the dip. Obviously, these prices will change, not next week, but the following week when the company executes a 10-to-1 stock split. It'll be, I guess, $95 is where you're looking to jump in on that one. Moving on to Google. Parabolic uptrend is still intact, but you got to expect it kind of flattens out. First area with Google is probably 159. Moving on to Microsoft. Oh, my gosh. When you get to the bottom of these channels, guys, that is obviously could be the time that it finally ends. And you did kind of technically wick through the channel. Now, the confirmation that this channel, like, it's never going to go on forever, this upward channel that we've been in since November. So when you know it's over is when you break through the most clearly defined previous lows, which are right down here at 387. If you close below 387 on Microsoft, it's anyone's guess where you find support at. More likely, it's going to be at the previous highs, all the way down here at 340. So you could have a massive drop, not necessarily in one day, not even over the course of a week or two, but the trend, if it breaks and reverses, that is not good, at least in the shorter term. And you could have some opportunities. Probably the first one I'd be interested at is 341 with Microsoft. Now, the other thought process is this is where you buy, and I may or may not have bought Microsoft shares at these levels because this technical pattern is not broken. And when you are at the bottom of the channel, you can see over the last 2.5 years what the action should have been. Now, moving over to Tesla. We thought maybe that these lows that you made back in April was kind of a reversal low, kind of there's probably a technical term for this. I don't exactly know, but I think I compared it to a baby blowing out its diaper. I think some people in the comment section actually appreciated that. It kind of basically means your baby's stomach is empty, and for Tesla, it means that maybe the selling pressure for the shares, at least for the shorter term, are over. We are consolidating very tightly in this like 175 range. We've done that in the past. You get any positive momentum in the shares and you retest areas, probably first stop up here at 205, higher than that at 250. I would peel off some shares if you've accumulated some shares of Tesla at these lower levels. Not asking you to sell the whole thing. And then obviously if you buy like a half a share of Tesla, there's nothing I can do for you. But if you bought like 100 shares of Tesla as you move to 200, 1 or 2 shares, as you move back to 250, maybe 4 or 5 shares at that level, just to capture some of that short-term momentum, because obviously, needless to say, short-term momentum with Tesla can be very, very steep, but you still could have bought shares at the current level all the way back here in 2020. So more or less, this stock has not performed well at all, certainly compared to other tech stocks like NVIDIA, Google, Microsoft. It's vastly, vastly underperformed over the same time frame. Folks, that was the FAANG Stock Recap Show for Friday, May 31st. I hope you all have a great weekend, and I'll be back next week with more news. Until then, good luck with your investments.